Hello everyone, my name is Kevin Carlson. I'm a mortgage broker here in Canada. Thank you so much for joining me on my channel to learn a little bit more about mortgage financing. Today I'm going to be talking about some mortgage rule changes that are coming about by CMHC. Now, CMHC is Canada Mortgage and Housing Corporation. They are one of the mortgage insurers that we have here in Canada. There are two other mortgage insurers as well. There's Genworth Financial and Canada Guarantee. What these companies do is they insure mortgages for Canadians that are purchasing property with less than 20% down. Whenever you're purchasing a home with less than 20% down, you will automatically be applied for mortgage insurance that will be added to your mortgage. Now, this mortgage insurance is not really insurance for you. It is not any sort of a life insurance or a disability insurance. It is an insurance to protect the lender, not you. So you pay the mortgage insurance premium, and just in case, if you walk away from the property, you go through foreclosure, and the lender ends up losing money in a transaction like that, which often happens by the time you have to pay for the lawyer fees and that sort of thing, then the lender will go to the mortgage insurer and be reimbursed for the money that they lost on the sale of your home. This mortgage insurance premium is a percentage of the mortgage amount and added to the mortgage. You can pay the mortgage insurance premium on the closing, but hardly any clients do that anymore. On June 4th of 2020, CMHC announced that they were going to be making some changes to their underwriting criteria when it comes to mortgage financing. There's three major changes that are going to be coming into effect on July 1st of 2020. The first change is that the minimum credit score for at least one of the applicants on the mortgage application must be at least a 680. The second change is that you're no longer allowed to borrow mortgage funds to be able to use as down payment. I did another video previously a few months ago regarding zero down mortgages, which basically that's exactly what that's based on. Being able to borrow funds for a down payment on a line of credit or something like that is basically what a zero down mortgage is. So CMHC will no longer be allowing people to borrow those funds to be able to use as down payment. The final change is a little bit more complicated, and it's circled around debt service ratio requirements. So let's talk about debt service ratio requirements just so I can help explain that. When you're purchasing a home in Canada, the mortgage insurers and all the lenders have rules and guidelines that they have to stick to when it comes to getting people approved for a mortgage. The Canadian federal government has limitations on the amount of mortgage that a Canadian is allowed to take out so that they're not put in harm's way and given more of a mortgage than they can afford. So what the banks and mortgage insurers do is they use debt service ratio calculations. So what they take is your gross household income and use that as a ratio up against your monthly payments on the mortgage you're applying for, plus the taxes and condo fees, plus all of your other debts. The first number that we use is called the gross debt service ratio. So that's your gross household income up against the mortgage, the taxes, and any condo fees. So that is called the GDS, or gross debt service ratio. The other number is called the TDS, or total debt service ratio. So it's the same as the GDS, only adding in any extra debt you might have. So it is your mortgage you're applying for, the property taxes on the house you're buying, and any condo fees, plus any payments on loans, lines of credit, and credit cards, and that sort of thing. Under the current rules by all three mortgage insurers, CMHC, Genworth, and Canada Guarantee, they allow us to take you up to 39% GDS and 44% TDS with excellent credit. So the third change that CMHC is bringing in is a limitation on the GDS and TDS calculations that we use when we apply for a mortgage for a client. So instead of 39 GDS and 44 TDS, those numbers are going to be dropped to 35% GDS, or gross debt service ratio, and 42% TDS, or total debt service ratio. So just for an example, let's say we have a family that has gross monthly household income of $10,000 per month. So under the current rules with all three mortgage insurers prior to July 1st of 2020, that family is allowed to get a mortgage with payments plus the taxes and any condo fees of no more than $3,900 per month. For the total debt service ratio for that family, they can't have any other debts for credit cards and loans more than $500 per month, bringing them up to 44%. After July 1st, if a client is applying for a mortgage through CMHC, then those are going to be limited a little bit. So the gross debt service ratio after July 1st through CMHC will be no more than $3,500 per month for the mortgage taxes and any condo fees, and then to a maximum of $700 more towards car payments, lines of credit and credit cards and that sort of thing. However, here comes the good news. Typically, whenever CMHC makes any sort of a requirement change with this sort of thing, generally the other mortgage insurers, Genworth and Canada Guarantee, typically do follow suit. They also make the same sort of changes. However, this time is not the case. Genworth and Canada Guarantee are not making any of these changes. The underwriting criteria with Genworth and Canada Guarantee will remain the same. If you have a credit score below 680, then more than likely somebody like myself, your mortgage broker, will request that your mortgage be insured through either Genworth or Canada Guarantee. And if your debt service ratio calculations for the home you're buying is going above the 35% and 42% levels, then once again, we will be requesting either a Genworth insured or Canada Guarantee insured mortgage for you. Well, I think that covers most of this stuff that CMHC has announced with some of their changes in limiting Canadians a little bit. But at least there's a little bit of recourse for people to still be able to get approved for the mortgages that they're looking for under the same rules and guidelines. If this isn't the first one of my videos that you've looked at, then you might want to consider subscribing to my channel to be notified when additional videos come out. And if you're looking to purchase a home or looking for some mortgage financing, I would be more than happy to assist you. Please contact me through my website and I'll get back to you as soon as I can. Thank you so much for having a look at my YouTube channel, and have yourself a great day.